Well, we had on ET now one of the most respected voices as far as equity markets are concerned, especially emerging markets and the equity markets in particular within the emerging market space. Jim O'Neill, the former chairman of Goldman Sachs Asset Management, former UK Treasury Minister, and the chair of the Chatham House, joined ET now exclusively for a conversation where he spoke to Nikunj Dalmia, and he spoke about his equity market outlook as far as 2021 is concerned. In his recent blog, he said, and he mentioned and discussed quite in depth about how the COVID-19 pandemic disrupted social and economic life. However, he said that what's actually been a savior for equity markets has been the very strong and generous monetary as well as fiscal policies that developed countries have actually gone ahead and taken over. He believes that there is good reason to suspect the bulls will continue charging in the new year as well. He expects equity markets to continue surging due to the remarkable monetary and fiscal policy expansion. He was also quite confident that the timely arrival of vaccines and the distribution is something that is quite capable of ending the deadly pandemic. On the other hand, what he is saying is that especially for the bearish markets, in terms of being a bear case, he's saying that equities are not cheap, especially in the USA. High valuation, as per him, certainly offers a reason to be quite careful, and he believes that in case a fall does come across, expensive markets are the ones that will actually fall the fastest. In terms of what he spoke to ET now about, he is saying that given the fact that the vaccine development has been quite remarkable, and the fact that they've actually managed to pass very stringent global standards, he's saying vaccines are and will remain the most important development for the back-to-normalcy trade in the new year. He's saying equity markets are guided by the fact that there will soon be 2 to 3 vaccines. And what he is saying is that he continues to believe and expects monetary policy to stay extremely accommodative. He's saying a combination of forces are what is driving markets higher. And what he is saying in terms of China is that China is not in a slowdown. China demand remains quite strong. He believes that the weak dollar will continue to ensure that commodity prices surge higher. What he is also saying is that in terms of the big tech or the cyclical stocks, he believes that there could be a switch from big tech to more cyclical stocks, given the fact that big tech companies are now under the regulatory eye. He also spoke about Bitcoin. He's not a very big fan of Bitcoin. What he is saying is that Bitcoin and other cryptocurrencies are very volatile. He does not advise exposure as far as market participants are concerned and investors are concerned. He considers Bitcoin to be a very volatile version of gold, and that is why he believes that it could be a bit of a worry. What he is also saying is that a weakening dollar will continue to be good as far as emerging markets are concerned. He believes that the environment is quite good as far as emerging markets are concerned. He is also quite positive for the equity market in terms of a Biden presidency.